In this video, we want to talk about Amazon and in particular how Cathie Wood just doubled down on the stock. Now, the stock is down 9% since earnings. However, that did not stop Cathie from purchasing Amazon shares for 5 out of her 6 ETFs. Now, her buying spree was only $35 million. However, the stock is up 12% year to date. Now, we have to do a couple of changes to the chart. Let me just go up to the monthly chart. And we had what was in the process of being a monthly buy level. However, we did not get that second extended range green candle, which would have solidified this buy zone. However, because we did not have a strong move out, although we did have closes above what was previous highs, as you can see, price shot down, not only on earnings, but due to the Japanese yen carry trade. So have to take this off the chart. I'll leave these lines here as they remain levels of interest at 160, 170, 190, and then all-time highs at 200. This was a great buying opportunity if price was to get down to this region. Again, we're on the monthly chart, and you have support, resistance, and price nearly hit that band as price declined and then started reversing at about $151. This band is about $140. Moving lower, you have 2 buy levels, and I don't anticipate price getting here anytime soon. Before we continue with the analysis, let's actually look at the purchases that Cathie Wood made. So again, 5 out of 6 ARK funds increased their positions in Amazon. These include ARK Innovation ETF, ARK FinTech Revolution ETF, ARK Genomic Revolution ETF. Again, that wasn't Wood's only buy this week. She loaded up $35 million worth on Amazon on Monday. Her Amazon purchases differ from her prior theme of speculative high-growth companies. According to Cathie's ARK, Amazon now carries a 0.17 weight across all ARK ETFs, so this is very low. It tallies in as the 72nd largest position in her fund. Now let's talk about the earnings. Amazon sales grew by 10%, short of estimates of 148.8 billion. They reported 148 billion, so 0.8 billion they missed the mark. EPS of $1.26, topped estimates of $1.04, and which was increased from 65 cents just a year ago. It's all about AWS. Company's cloud offering continues to show impressive growth. It grew by 19% to 26.3 billion, beating the estimate for 26 billion. Andy Jassy had to say, "We're continuing to make progress on a number of dimensions, but perhaps none more so than the continued reacceleration in AWS growth." All right, let's talk about the guidance, because that's what it's all about. Amazon expects between 154 and 158.5 billion of sales for third quarter, or growth between 8 to 11%. This assumes a 90 basis point drawdown from foreign exchange rates. Analysts were expecting much more at 158.43 billion. So Amazon has returned 12% year to date, roughly in line with the S&P and NASDAQ 100. Trailing PE ratio of 40 is currently near the low, so from a valuation standpoint, it's a buy. AWS is Amazon's highest segment grower, and continued reacceleration will benefit Amazon. Company is also working on improving its e-commerce offerings both in the U.S. and internationally. As long as it's able to increase its cloud and e-commerce market share, Amazon should continue to provide returns in line with or above the market. All right, so again, this is the monthly chart. Let's go down to the weekly chart, and you can see a nice reversal taking place. So where would you get in if you want to get long? We had an awesome week in the equities this week. I think it was the best 1 week return in several years. So it only makes sense that we've had this huge reversal in Amazon as well. This gap down was on earnings. The reversal happened on August 5th. The chart suggests look for price to move higher. Look for that gap to get filled at $184. Price is above the 200-day moving average, which is bullish. That gap coincides with some moving averages, which serve as dynamic resistance. So I think price can move higher. Again, look for your next target to come in at the $184, and that's roughly another $7 to the upside. Thanks for watching. Subscribe, please. Like the video.